What happened in August? Well, spring has come early with more sellers making their comeback after months of holding back, now that the interest rates are either at or near their peak. The growing pool of stock across the market is creating a healthier dynamic between supply and demand. This is welcome news for the first-home buyers wanting to get out of the rental market and sellers who have put off their plans because they couldn't find anything to buy. Naturally, the growing pool of stock has reduced the number of buyers we're seeing engaged per property. We are seeing 1 to 2 parties highly engaged per property as compared to 3 to 4 we were seeing in the previous quarter. A lot of these engaged buyers have been looking for a home for months, fruitlessly, so when they see something they like, they are acting fast. Sydney house prices have resumed rising at a faster pace in August. According to CoreLogic data, July recorded its smallest price growth of 0.9% since property prices started to rise in February, sparking concerns the market was in danger of tipping back into a downturn. However, home values have re-accelerated in August, increasing 1.1% over the month, defying any expectations of a double-dip downturn in values. Sydney has led the recovery with home values climbing 8.8% since bottoming out in January this year, including closer to a 10% gain over 2023 as predicted by Westpac. We expect to see a lot more listings hit the market in spring, which can hamper price growth and increase how long properties take to sell. Listings in Sydney increased by 9.8% in the past 2 months from a low base but still lower than a year ago. Our group achieved a record listing month, taking 160 properties to market. We auctioned 54 properties and achieved a very strong clearance rate of 83% and sold almost half the properties that passed in within 7 days of the auction. Despite the strong results, we are meeting less buyers per open home and seeing less buyers register to bid at auction. Fixed to variable wave. We are also currently halfway through this huge wave of $350 billion worth of loans, moving away from the cheap fixed rate space into the now more expensive variable space. Many of these borrowers will be facing a tripling of their mortgage repayments. We're starting to see some mortgage pain creep its way into market with more distressed selling popping up on our books. However, CBA are suggesting that the cash rate has peaked at 4.1% and the next move from the RBA will be to cut rates at their next meeting in March 2024. Most of the lenders will be working with clients to avoid any form of mortgage selling, so we don't expect that to be a large trend going forward. Investors offloading. While total listings for Sydney houses are rising, they are 15% lower than a year ago and 11% below the previous 5 years average. By contrast, unit listings are now 0.5% above the previous 5 years average. We are seeing a lot more units and townhouses hitting the market, I think because more investors are offloading their property. So even if the listings are rising, they are not all what many home buyers, particularly those who are upgrading, were looking for. Unit listings are taking longer to sell because they are generally targeted by the first home buyers. These buyers tend to be more scared and they are slower to make a decision, and they've been hit hardest by the rising interest rates. So the turnover is not as fast as detached homes. Competition at the lower end is not as strong what it was at the beginning of the year, but there is still a healthy appetite from first-home buyers and downsizers to buy these apartments. What happened in our core suburbs? So Team Nike listed 16 properties and sold 17 in August. Our team auctioned 9 homes with 8 selling under the hammer and 1 sold prior and achieved a clearance rate of 100%, totaling of 16.5 million in gross volume. To give you a sense of number of buyers out there and their appetite, we met 672 buyers face-to-face across 113 Saturday open homes. Our highlight properties this month were 47 Binalong Road in Pendle Hill and G14 at 31A Garfield Street in Wentworthville. At 47 Binalong Road, we had 192 prospective buyers, 45 contract holders, 14 registered bidders, 16 competitive bids, and sold for $85,000 over the vendor's reserve price. We sold apartment at G1431A Garfield Street, Wentworthville prior to auction for $603,000, which was well above the vendor's asking price. There were 38 prospective buyers, 7 contract holders, 2,895 internet views, and was on the market for just 20 days. If you're looking to buy or sell this spring or curious to know what your property is worth, please contact me and my team today.